The stock price of BYD, Tesla, NIO, XPeng, Lucid, you name it, they've all gone down. Many of them have crashed. Right now, I personally, you look at your portfolio and you go, wow, that's a bit of a loss. But right now is the time that smart investors like Cathie Wood are pulling the trigger. Hello, my friends. Welcome to the channel. My name's Sam Evans and I'm coming to you from Melbourne in Australia. You're watching The Electric Viking. Great to have you. Thank you for subscribing. Wonderful to have so many new subscribers. Now, in the past, around 60% of channel viewers weren't subscribed, but that number is starting to change. So welcome to all of you new subscribers and thank you for pushing our channel views to just over 1 million views per week. Cathie Wood has just pulled the trigger on Tesla stock. So have I. It wasn't easy, I have to say, because emotionally, when you've made a loss this year, which obviously pretty much everyone has on every stock they own, name one that hasn't. I don't know, I'd be surprised if you can. And then, it's challenging to go, I'm going to buy now. Your emotions tell you to do something else, but logically, now is the time for Cathie Wood and for me. Now, Cathie Wood has genuinely been right with her buy and sell decisions with Tesla stock. She has lost a lot of money on a lot of the tech stocks she's invested in. But Tesla has paid off really well for ARK Invest. Cathie Wood has been one of the biggest Tesla bulls on Wall Street. The stock has been at or near the top holding in several exchange-traded funds run by Wood. But Wood is still, or was still, a seller of Tesla shares, which began last fall when the stock was near its highs and again in the spring of this year. And it seems as though she made a pretty savvy decision doing that. At the time, I got to admit, I questioned her doing that. But now that she's rebuying back in at a much lower price, turns out she timed things pretty well. Wood's trading has been timely, buying back shares when the clock dipped and selling some off after it rose higher. That's why investors should note that Wood has been buying again in October, including another 66,200 shares for the ARK Innovation Exchange Traded Fund the day after Tesla reported third quarter earnings. Now, here's 3 good reasons why Wood is in bull mode with Tesla stock and why maybe we should be too. Cathie Wood likes growth. And yeah, Tesla is one of the greatest growth stories in the history of mankind. That's not an overstatement. Just look at the company's growth this year. The automotive market is down globally, massively. Tesla, well, they're not. In fact, they're the opposite. How is that happening? Well, Wood's latest buy came after the stock sank following Tesla's Q3 report, which made no sense, in my opinion. But that's what happens. Some analysts were focusing on the admission by management on the earnings call that it expects to come up short of the 50% growth goal for 2022 vehicle deliveries versus last year. Importantly, Tesla still projects it will meet that goal for vehicle production. The difference will be due to shipping bottlenecks the company has been experiencing. Now, the key reason they're experiencing these shipping bottlenecks is simply because Tesla doesn't want to pay ridiculous prices for shipping. So they're waiting until the shipping price is reasonable to wherever they're sending the cars. So basically, you can send something express post, costs you more. You can send something regular post, costs you less. Tesla is all about making profits, which is one of the things I like about them. So personally, I think that's not actually such a bad admission. In Q3, Tesla produced 22,000 more vehicles than it delivered due to those logistics challenges. Or Tesla's new way, in my view, it's not really a challenge. It's just that Tesla's way of doing things is changing. It's becoming more logical rather than driven by, earnings calls and investor notes and all that kind of stuff. In my view, it's a good change. Let me know what your thoughts are on that, though, in the comments. The thing is, right, those buyers aren't just going to inventory. Whether customers take ownership in one quarterly period versus another shouldn't matter to long-term investors. And it's not just production that is growing at a fast rate. That total revenue grew 56% year over year in Q3 and net income more than doubled. In fact, right, Tesla made more money than Toyota on 1/3 the amount of sales. I'm just going to let that sink in. more money than Toyota on 1/3 the amount of sales. What does that tell you about Tesla's profitability per car? What does that tell you about their efficiency? What does that tell you about their manufacturing efficiency? Considering Toyota doesn't even sell EVs, which everyone's selling at a loss right now, other than Tesla and BYD. Profitability is strong at Tesla. Another concern for some investors is how Tesla's profit margins will hold up as competitors start to enter the market en masse. But the thing is, they have entered the market en masse. In fact, they've oversaturated the market in China, which is the reason that most Chinese manufacturers are selling at a loss to try and get market share. Tesla is operating in that market, and it's still making massive profits in that market because its costs to produce its vehicles are incredibly low. Now, Tesla did just reduce prices today. In fact, within the last 12 hours, they reduced the price of every single model they sell in China, aside from the Model S and the Model X, of course, which they're about to sell there. Every single model of Model Y, every single model of Model 3, they've reduced the prices on. This is really going to be a huge benefit for Tesla. The key reason for that is that now the Model Y standard range, which is by far Tesla's most popular vehicle in China, largely takes a huge amount of Tesla's sales in China. It's now below the 299,990 RMB figure. The reason that matters, right? That means it's below the $39,500 US cutoff. So buyers will now qualify for subsidies. If the vehicles are priced over 299,999 RMB, they don't qualify for subsidies. In other words, buyers will not only get the vehicle for a couple of $1,000s cheaper, the subsidies will make it even cheaper again. Plus, in cities like Shanghai, buyers get another $2,000 US subsidy. It means, essentially, in fact, more than 50 million people in China have access to a Tesla Model Y at a price of $35,000 US. That will drive sales up massively over the fourth quarter and the first quarter of next year. Now, we learned that Tesla's automotive gross margins held up really well in the third quarter. And Tesla's automotive gross margin held steady at 27.9% versus the prior quarter. That's the best in the industry, period. That implies that Tesla is making up for added expenses. I mean, Ford, on the other hand, recently warned investors that it expects an extra $1 billion in inflation-related supply costs in Q3 alone. Now, unfortunately for Tesla, they're a lot more vertically integrated than Ford, so they haven't been as affected by Ford as much as Ford and other automotive companies have by all these increases in the cost of parts as a result of so-called inflation costs. Now, these inflation costs, I'm not personally buying it. I think these are excuses to just increase prices and make more profit. Now, I know a lot of you are skeptical on that, but if you have a look at the actual earnings of companies like BYD, Goshon High-Tech, CATL, the world's largest battery company, their earnings are up 300 to 400% versus the same period last year. If those inflation costs were hurting them so badly, how on earth are they making billions of dollars in profit? Yeah, doesn't make sense, does it? Now, Tesla has raised prices on its products in a lot of markets where it sells its vehicles, and investors should take it as a good sign that those price hikes are helping and are not sapping demand. Like, look at the price rises in the US. They continue to rise the prices and demand hasn't gone down, which is staggering. And there's one key factor that isn't really being talked about, and we have to acknowledge this. Tesla has been at a $7,500 US disadvantage in the United States market versus everyone else, except for GM recently. Now, the fact that that will reverse, Tesla vehicles will now qualify for the subsidies, and many of their competitors now won't, will give them a huge advantage over the next 6 to 12 months in the United States market in particular. Contributions from other products as well. No one's talking about this much either. Some Tesla critics point to the fact that the company has a limited product lineup that hasn't been updated for years. But the electric semi-truck will begin deliveries on the 1st of December to PepsiCo. The Cybertruck is basically about to enter production, according to Elon Musk, and it should begin deliveries next year. Tesla has more than 1.5 million pre-orders for that. I mean, if only 20% of those pre-orders actually came through, that's 300,000 vehicles right there. Down the road, Tesla have announced right now they're working on an electric vehicle platform which will cost 50% less than the platform of the Model 3 and the Model Y. Tesla plan on making more of that particular car that affordable $25,000 Model A or Model 2, whatever you want to call it, they plan on making twice as many of those as every other vehicle they have right now put together. That matters. Musk told investors the company is working as quickly as possible to increase battery production capacity. Its energy division also includes battery storage and solar rooftops and has more demand than it can supply. Sales from that division represented 5% of total revenue in Q3, as its energy storage deployments jumped 62% year on year. And Tesla made the point. They believe that their energy storage will massively ramp up. They're ramping up production in that area because they say that energy storage and that part of the market will increase at a much faster rate than electric vehicle adoption will. All of that should result in many years of growth to come from different places for Tesla. Plus, of course, they're working on robotics and automation. We shouldn't discount that as well. Some investors may be concerned about the current state of the economy, but I think personally, that's noise. We get caught up in things. What did Jim Rohn say about that, right? People used to say to Jim Rohn, Jim, you're a smart man. Tell us how the future's going to be. And you know what he'd say? Much like the past. There'll be ups, there'll be downs, but it won't really change all that much. Don't get caught up in the noise of today. This week, Musk said that calling Tesla's business recession resilient is a real thing, and that's due to the global momentum of transitioning to electric vehicles. This will continue. The manufacturers that should be concerned about their sales are the ones losing sales right now because they're making gasoline-powered products, and they're 95% or more of their product portfolio. Cathie Wood does a lot of buying and selling in her funds. That's true. But individual investors should be looking at where the company will be long term. Where will they be in 2030? Will they sell 10 to 20 million vehicles? Will they be the biggest automotive company in 2030? Will they have other services and products that they're making billions of dollars from? I'm convinced that they will. Tesla is well positioned. It has very little debt. In fact, only $2 billion of debt. And it has more than $22 billion of cash sitting in a bank account. In other words, it has 10 times more cash than it has debt right now. Now, Tesla's valuation is high. Its price to earnings ratio is 60. Competitors such as Ford and General Motors, they're at 5 or 6. But realistically, those companies have to spend many, many tens of billions of dollars in order to change their companies from building gasoline-powered vehicles to building electric vehicles, which they currently sell at a loss. The question is, are they even capable of selling them at affordable prices and making a profit? Well, nobody even knows. It hasn't happened yet. If Tesla continues to grow production and income at their current levels, long-term investors who follow Cathie Wood's lead and buy at the current price today, which is what the equivalent of $600 US, $200 US before pre-stock split, about half the price the stock was about a year ago. I believe if they do that, they're making a very good investment. And that's why I tried to remove the emotion out of the equation and buy again. Thanks for watching. Have a great day. Bye-bye.